What's going on with QQQB right now? The chart moves almost in lockstep with the underlying Invesco QQQ Trust and the Nasdaq 100. Short-term sell signals appear whenever tech stocks pull back, and yet some people still argue this token is somehow undervalued relative to its underlying asset. How do those two views even sit together? Let's talk about it. Looking at ratings and signals, pure crypto technical scanners often produce mixed or neutral readings because the token behaves more like an equity proxy than a typical speculative crypto asset. You will see fewer aggressive sell or buy signals driven by crypto specific momentum and more commentary tied to the broader tech and growth stock outlook. Funding and open interest exist but tend to be secondary to the equity market. The short term outlook from pure chart-based sources is therefore less about crypto cycles and more about whether the Nasdaq 100 itself is overbought, oversold, or consolidating. Here's the real debate. Is QQQB actually undervalued at these levels, or is the current price simply a fair reflection of the QQQ ETF it represents? One side points to the convenience of on-chain exposure to the Nasdaq 100, the ability to trade 24/7 without traditional market hours, the one-to-one backing and convertibility features, the distance from any previous equity highs, and the idea that tokenized major ETFs could see growing demand if more capital seeks regulated real-world assets on-chain. They argue that any premium or discount to the underlying creates opportunity and that broader RWA adoption could support higher relative interest. The other side says look at the mechanics. QQQB is designed to track the QQQ ETF, so large sustained premiums or discounts tend to be arbitraged away. The token's value is fundamentally tied to the equity market and the issuer's ability to maintain the backing and convertibility. If tech stocks themselves are range bound or under pressure, the token has limited independent upside. That's the core tension. The product works as intended and offers real utility for on-chain Nasdaq 100 exposure, but the market largely prices it as a direct proxy rather than an independent growth asset. Retail often gets caught here, treating it as a pure crypto play while the dominant driver remains the equity market. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on QQQB. I actually read them. On the technical side, the bigger picture for QQQB is almost entirely driven by the underlying QQQ ETF and the Nasdaq 100. Price action follows the equity market's daily and weekly swings rather than independent crypto narratives. When tech and growth stocks trend higher, QQQB tends to follow. When they consolidate or correct, the token does the same. Momentum indicators largely mirror the equity index's own readings. Short term, it can show relative strength or weakness versus the underlying, depending on liquidity and exchange premiums or discounts. But the dominant force remains the Nasdaq 100. You can argue there is some resilience when the equity market holds key support, but any independent chart analysis has to start with the QQQ price first. QQQB is a tokenized version of the Invesco QQQ Trust offered through the bStocks framework. Each token is designed to provide economic exposure to the QQQ ETF, which tracks the Nasdaq 100 index of the largest non-financial companies listed on Nasdaq. It is backed one-to-one by the corresponding underlying shares held in segregated custody, with convertibility features available under the issuer's terms, and it trades 24/7 on-chain. It currently ranks in the mid-hundreds by market cap with relatively modest circulating supply and daily volume, and the price has been trading near the levels you are seeing, essentially tracking the spot price of the QQQ ETF itself. It's still in the conversation because of the broader interest in real-world assets and tokenized equities. The demand for on-chain exposure to major tech and growth stocks without traditional brokerage hours, and the simple fact that the Nasdaq 100 remains a core benchmark that many participants want to hold in tokenized form. Bull case versus bear case is fairly clear. Best case, the Nasdaq 100 itself enters a sustained uptrend driven by tech and growth factors, demand for regulated on-chain equity exposure grows, and QQQB tracks higher with occasional premiums. In that scenario, the token benefits directly from the underlying ETF's strength. Worst case is the opposite. Tech stocks consolidate or correct, demand for tokenized equities stays muted, and the token simply tracks sideways or lower with the equity market. In that scenario, the undervalued conversation is largely about the QQQ price itself rather than any unique token premium. Short term, the picture is almost entirely dependent on the Nasdaq 100's next move. You need to see the equity market reclaim key levels with volume before any meaningful short-term buyers for QQQB can flip with confidence. Longer term, it comes down to whether tokenized major ETFs continue to attract capital as a convenient on-chain alternative to traditional brokerage exposure. That's the path that keeps the current levels looking constructive rather than just a pure equity proxy. Risks are meaningful but different from most crypto tokens. Volatility is primarily equity market volatility, not crypto-style swings. A broader risk of move that hits tech stocks, changes in interest rates, or shifts in growth stock sentiment can pressure the price. Counterparty, custody, and regulatory risk exist because the token relies on the issuer structure, segregated backing, and convertibility process. Liquidity is more limited than the largest crypto assets or the underlying ETF itself, so larger moves can still create temporary premiums or discounts. There's also the structural risk that comes with any tokenized real-world asset. Regulatory changes, competition from other equity tokens, or a drop in demand for on-chain stock exposure can affect relative interest even if the underlying ETF remains stable. Nobody knows which way this resolves. The token continues to track the QQQ ETF as designed. The product remains one of the more direct on-chain exposures to the Nasdaq 100, and the market remains selective about which real-world asset stories it rewards. So the real question is simple. Is this the kind of project that can keep expanding its role as a go-to on-chain Nasdaq 100 exposure and benefit from any sustained tech rally? Or are we just watching a well-functioning equity proxy settle into the same range-bound or directional moves as the underlying ETF while people argue about valuation?